Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 2nd of July, 2022, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the first week of July. Let's take a look at the Euro, where yesterday, Friday, it made a significant dip to try to test the previous swing lows near the this swing low at the 103.50 area from May, and then also a test again in June. So, and this was just on the first day of July. So it's threatening to dip lower and started the week from up at the 106 area and dip all the way down to just below 104, down to a low of 103.66. Right, let me expand this a bit clearer. So that was right from the start of the week at on Monday, and attempted to push up higher, but failed. And broke down lower here on Tuesday, and weakened throughout the week against the US dollar, which attempted to climb up and test resistance again. So that was a significant break here. And dip below the 104. We may need to take a look at the next support levels below that at the 103, and then a critical one at the just around 102 level. It's a very key support zone here. But for now, this is a critical area, and let's change this now to an interim support. This has already been broken at the 105, so the 105 now is a resistance. And I think leave this one out for now. That's should be safe up there. This is the next key zone resistance. And let's take a look on the weekly time frame. And that was a very close as well, although it did attempt to recover above the 104, but it's creeping lower. And on the monthly time frame, that was the close for June, very close with some space for the lower wick, which it already filled on the first day, and managed to find support. So we'll see if this coming week there's a bit more recovery. And a critical one for this week with non-farm payroll at the end of the week. There's also the economic forecast for the EU zone. right? So if this continues and breaks down below the swing low, there is a danger of further test of support. If it fails to climb up above the 105 and it breaks below this level to 103, and it could continue down to the 138 fib extension here, down to the 102 area. So it needs to recover and climb up above 105, at least to stave off any drop for the time being. So if we can recover and stay between the 105 and the 106 area, and it's able to consolidate. Otherwise, any break of 104 again could bring further bearish move into consideration. All right. So critical week as we head into new month, and with ECB as well meeting again this month, as well as the Federal Reserve, the FOMC at the end of the month. So we'll need to watch the US dollar price action against all these major pairs. So let's switch over to take a look at the DXY, the US dollar index. So here's the DXY, and it did start to find support right from the start of the week after dipping towards the 50 fib retracement, and climb up very strong in the early half of the week on Tuesday and Wednesday to finally test the 105 again before pulling back. But then on Friday yesterday, it did attempt to push up above 105 again and reach a high, reached a high of 105.35. So it did attempt to recover and climb up higher, but still restricted at the 105 level. So this is still a key resistance zone, resistance level. So it's attempting to climb up above and trying to reach the next hurdle at the 106. Support is still right at the 50 fib here. So that was the key support level. Move this one out for now, as the 55 EMA is rising up as well. So that's a critical support now. And it did break out of this symmetrical triangle after dipping lower, but it managed to recover that. So that was broke down and recovered up and broke up higher. So let's see if it's going to be able to continue higher for this week with the non-farm payroll. It's Friday, and we'll see if it's going to test the 105 again and try to reach 106, or whether it's just going to be limited by this swing high at 105.54. and looks like there's clearly signs of slowdown in the economy as well, with the Wednesday's final GDP figure coming down slightly lower than expected as well, even with the negative growth at minus 1.6%. So there's fears of a recession coming up. We'll see what the next quarter figure is going to be. So for now, let's leave it as such, and a major confluence above that, but that's later on if it does really break out higher above the 106. And perhaps we can move this to at the resistance level. Okay, so let's head back to the other major pairs and take a look at the response from the other pairs as well. Let's continue with the cable, and you can see the cable is similar as well. It did attempt to climb higher, but failed to break above this 50 pip retracement zone and fell from Tuesday onwards right into Friday with a dip and test of the 120 zone. But it managed to bounce and recover from that. So it hit 119.76. Critical area of support, and managed to recover back up from there. So it's we take a look on the 4-hour time frame, you'll see that it's recovered just like the other major pairs and spot gold as well. Last 8 hours it managed to recover as the US recorded the lower than expected ISM manufacturing PMI. So that helped to stave off further weakness, as it had been dropping since the start of the day, similar to the euro. Okay, and also let's take a look at the weekly time frame, and also fairly bearish close, but it's holding above support at above the 120 critical round figure support. Go to the monthly, and let's see the close for June. This was the very bearish close, and it yesterday, just the first day of July, it filled this low wick, but managed to form a higher low. Okay, and let's find the retracement and perhaps a bearish continuation move here, failing, and retracement to the 50 fib. If it breaks below this swing low, then 138 will be the next target at 116.54. But for now, this is a very critical support zone. So probably extend this to this 120 and the swing low area 119.34. $122 is interim resistance now. I think we can discard this for now. It's Very safe up there. And extend further. So yes, since this retest of this swing low has failed and dip lower, and let's find another. That was the next support level there. That's at the 120.75. Let's mark this. $75, yeah. Right, so far it has been able to close above that. Let's see if it's able to hold on for this week as well. No major news from the UK this coming week, and it's just exposure to the non-farm payroll report, as with the other major pairs as well. Let's take out this consolidation box here. All right. So it needs to climb back up above the 122 to stave off any further weakness and stay between the, if we can recover back to the 38 fib, which is actually the 62 fib retracement of this move back up. Otherwise, if 50 fib is still resistance, then needs to stay above 122. Otherwise, if it drops again below this previous swing low, then 120 will come in the picture again, and any break below this critical support zone is going to be dangerous for the cable and the sterling pairs. Okay, let's move on to the Aussie dollar. And similar to the other major pairs as well, except for yesterday, the Aussie really fell hard and fell right through the round figure of 68 and dipped all the way down to low of 67, 64. Managed to find support from this previous swing low area here, all the way back from May of 2020. It needs to hang on and stay above 67, as there's the 200 fib extension below that, and there's also previous swing lows. So that was the weekly close, which was pretty bearish. It's only a small wick of rebound. There's also, this is the month close for June. It was a bearish close, and just the first day it already dipped lower to test, extend past the two previous lows. So that's a dangerous, ominous sign here, which means it could extend further lower for this month, and it's only just the first day, so it's a critical break here. And this coming week, there's also the RBA rate decision. They were expected to raise another 50 basis points. So this is a critical area of support here, and not sure whether this rate increase is going to help the Aussie dollar. It did surprise with a higher than expected rate increase previous month, to 0.85, and expected to increase to 1.35 this Tuesday. There's also exposure to the non-farm payroll report this Friday, so we'll see how the US dollar reacts, and that will impact the major pairs. So let's move this. 70 is definitely a critical resistance now. Key resistance zone. Let's remove these, and swing low area, that's a very critical resistance. So this area now at 69 is also interim resistance. Okay, and 68 along with the swing low area, that's the critical support. This whole area here. Okay. So yeah, this close on the Friday is a break of this previous lows. So there could be a pullback to retest, and then if it doesn't recover back up above 69, then that could be a danger sign. If it fails, then it's just a retest of this break, and perhaps a continuation lower as well. So it's an ominous sign for the Aussie dollar as compared to the other two pairs. So we need to watch this. Right, there you can see the break down here. Okay, so do check out my other videos on spot gold and dollar yen as well, and have a safe week and a good trading week, and cheers for now.